Imagine waking up and discovering your VeChain tokens suddenly stopped generating passive income. Sounds impossible, right? VeChain just quietly changed the rules, and if you're a VET holder not paying attention, your rewards might have vanished overnight. Hardly anyone noticed until now. I have to confess, I almost missed it too. If you're a long-term VeChain holder like me, you probably don't check VeChain news every single day. We just let it sit, accumulate some VTHO in the background, and go about our lives. That used to work fine, until now. Here's what happened. On December 2nd, 2025, just a few days ago, VeChain launched something called the Hayabusa upgrade as part of its new Stargate 2.0 system. Fancy names, I know. But the bottom line is this. VET will no longer generate VTHO on its own just by sitting in your wallet. VeChain essentially flipped a switch on how rewards work. This upgrade is rolling out fast. Validators, the network's block producers, have until December 9th to fully onboard and complete the first new reward cycle. In other words, within a week of launch, the whole network's economy is shifting. Yup, you heard that right. The days of getting free VTHO for doing absolutely nothing are over. When I first read that, I'll be honest, I was a bit annoyed. It felt like someone took away my free candy. I mean, come on, one of the sweet perks of holding VET was that little VTHO drip, like interest accruing in a savings account. Why fix what wasn't broken? Well, it turns out it was kind of broken, or at least not ideal for the long term. VeChain's team saw a problem. Tons of VTHO was being printed and handed out to every VET holder, even those who had their tokens just sitting idly on exchanges or in cold storage. This led to a lot of inflation and allowed people who weren't actively supporting the network to reap rewards. It was like paying everyone participation trophies, even if they never showed up to the game. So the Hayabusa upgrade is basically VeChain hitting the reset button on their economic model. From now on, if you want to earn VTHO and other rewards, you have to actively stake your VET through their new Stargate platform. Let me put that in simpler terms. Imagine you used to get paid just for holding a gym membership card without ever going to the gym. Nice deal, right? Now, the gym changed the policy. They'll only reward you if you actually show up and work out. In our case, showing up means staking your VET, also called delegating, to participate in securing the network. Technically, VeChain has moved to a delegated proof-of-stake system. Instead of a small, limited set of validators doing everything, they're opening up participation to everyone. It's like going from an exclusive club to an all-hands-on-deck community. You can choose a validator and delegate your VET to them, kind of like voting for someone to secure the network on your behalf. In return, both of you earn rewards. It's a big shift from the old days. Here's an interesting part. When you stake your VET through Stargate, they don't just lock it up and call it a day. They actually give you a staking NFT in return. Now, don't freak out at the term NFT. This isn't some collectible cartoon image. It's basically a digital receipt that represents your staked VET. Think of it as a claim ticket for your stake. That staking NFT goes through a short maturity period. Honestly, I think of it like waiting for your coffee to brew. You stake, you get the NFT, and then you wait a little bit before it's fully mature and earning rewards. If you're impatient, there's even an option to pay a small fee in VTHO to skip the wait, sort of like buying a fast pass at a theme park to skip the line. It's an optional shortcut. Pay a bit of VTHO, and your staking NFT starts earning immediately instead of after the waiting period. Once your NFT is matured or you paid to fast track it, your staked VET will start generating rewards again. And here's the kicker. Those rewards will likely be better for active participants than the old system was. Why? Because you're not sharing the reward pool with every single couch potato holder out there anymore. Only folks who actively stake will get the goodies, meaning potentially bigger slices of the pie for each of us. In fact, according to the team's estimates, tying VTHO generation to actual network usage and staking could slash VTHO inflation by up to 40%. That's huge. less inflation generally means the tokens you earn might hold more value, or at least won't be constantly devalued by oversupply. With the Stargate 2.0 rollout and Hayabusa live on mainnet, VeChain is touting several benefits to make the ecosystem more user-centric. In plain English, that means we should see 1. Lower VTHO inflation. By cutting off automatic VTHO for inactive holders, the network could reduce token inflation by around 40%. 2. Greater decentralization, moving to delegated proof of stake and letting anyone stake via a validator opens up participation and avoids reliance on a few big validators. 3. Higher reward yields. Active stakers or delegators should enjoy higher APYs on their VET because they're sharing rewards only among participants, not every holder. And 4. Predictable, low fees. The new model aims to keep transaction fees stable and affordable, which is great for anyone using VeChain's network. All that sounds great on paper, if people actually use the new system. Here's the potential downside. Some regular holders might find this all a bit too much to bother with. If someone bought VET a year ago and shoved it in a drawer expecting it to accrue VTHO forever, they're in for a surprise. The next time they check their wallet, they might wonder, why haven't I earned any VTHO lately? To be honest, I'm a bit worried about those long-term holders who don't follow the daily news. I have a friend like that. He holds VET but doesn't really tune into crypto updates. If I didn't tell him about this, he'd have no clue that he needs to stake now to keep earning rewards. It's a silent change that could catch a lot of people off guard. In fact, we were talking about this in our free educational Discord community. The link is in the description if you haven't joined us there yet. One of our community members pointed out that many VET holders might be left in the dark. It was a real wake-up call, and it's exactly why being part of a community helps. If I wasn't chatting with folks in Discord, I might have overlooked this for weeks myself. So, quick plug. If you're not already in, hop into the Discord, it's free, and it's one of the best ways to stay on top of these kinds of developments together. Anyway, thanks to that heads up, I dug deeper and started wrapping my head around how to stake with Stargate. Honestly, it's not too hard. If you've ever staked on another platform, like delegating a day or anything similar, you can handle this. You'd likely use VeChain's official wallet or web interface for Stargate, choose a validator, and delegate your VET to stake. Boom, you'll mint your staking NFT and start the process. It might sound fancy, but it's not rocket science. The key point is, active stakers get the rewards, inactive holders don't. And speaking of big changes and making decisions, let me pause for a second and put on my serious hat, because I need to remind you of something important. This might shock you, but I'm not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are highly volatile, and you could lose all the money you invest. Always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. This video is for entertainment and educational purposes only. Alright, with that out of the way, let's talk about what I'm doing personally and what this could mean going forward. Here's my game plan. I'm definitely going to stake my VET. Why wouldn't I? If the network says delegate and you'll get rewarded more fairly, I'm on board. The first thing I did after learning this was head over to the new Stargate platform and stake a portion of my VET. I got my shiny new staking NFT, which, I'll admit, is kind of cool conceptually. Like a badge saying I'm an active participant, I didn't bother paying extra VTHO to fast-track the maturity because I can wait a few days for it to kick in. No big deal. If you decide to stake, you will have to pick a validator to delegate to. I'm not going to endorse any specific validator here, and this video isn't sponsored by VeChain or anything, to be clear, but generally, you'd want to choose a validator with a good reputation and reliable uptime. The way the rewards work, the validator will take 30% of the block rewards as their cut for running the infrastructure. Plus, they get 100% of any priority transaction fees on the blocks they produce, and the remaining 70% of rewards is shared among us delegators. So, it's a partnership, they keep the network running, and we support them with our stake. If that sounds complicated, don't worry. You don't really need to micromanage that. Just know that by delegating, you'll get your share and the validator gets theirs. The broader point here, being active in crypto has its perks. This whole scenario got me reflecting on how important it is not to be a passive passenger in this space. Things change fast, and the people who stay engaged tend to benefit the most, or at least avoid nasty surprises. For example, one habit I've picked up is having multiple exchange accounts as a backup plan. It might sound unrelated to VeChain's staking, but it's all part of being prepared. If one exchange suddenly goes down or freezes withdrawals, and we've seen that happen more than once, I don't want all my options cut off. That's why I always say, have a plan A, plan B, and plan C when it comes to exchanges. I'm signed up, KYC verified, and ready to trade on a bunch of reputable exchanges. If exchange X has an issue, I can quickly move to exchange Y or Z without skipping a beat. You never know when an exchange might experience technical difficulties, or, in worst cases, collapse altogether. Those of us around during the FTX fiasco know exactly what I mean. By the way, on my website, linked in the description, I've listed all the exchanges I personally use and trust. Those links are affiliate links, meaning if you use them to sign up, it earns a small commission that supports the channel at no extra cost to you, of course. But that's not the main point. The main point is to be prepared with multiple on-ramps and off-ramps in the crypto world. It's part of a good risk management strategy. Now, while it's smart to have multiple exchanges at your fingertips, I'll always remind you, don't leave large amounts of your crypto sitting on those exchanges any longer than you have to. Exchanges are tools for trading, not vaults for storage. Not your keys, not your coins, as the saying goes. So, after I'm done trading, I move my assets to secure wallets. For long-term holds, like my VET stash or Bitcoin or whatever, I use a hardware wallet for maximum safety. Personally, I'm a fan of ledger devices. I've been using them for years to keep my crypto safe offline. If you're considering a hardware wallet, make sure you buy it directly from the manufacturer, like Ledger's official site, to avoid any chance of getting a tampered device. I actually have a direct link to Ledger on my website as well for those interested. It's an affiliate link, so if you use it, it helps support the channel. But regardless of the affiliate stuff, security is paramount. A hardware wallet is one of the best ways to protect your investments from hacks or exchange failures. Okay, stepping off my soapbox about security and back to what's happening with VeChain. Big picture, this Hayabusa upgrade marks the start of what they're calling the second phase of the VeChain Renaissance roadmap. Pretty dramatic name, right? But in a way, it is a renaissance, a rebirth of how the VeChain ecosystem operates. They're not just tweaking a setting, they're changing the fundamental economics of VET and VTHO. And interestingly, they're doing this with an eye on the future and even on regulations. If you've heard of MiCA, that's the EU's new regulatory framework for crypto. VeChain is aligning their new tokenomics to be MiCA compliant. In plain terms, they're trying to ensure that VET and VTHO work in a way that will be friendly with upcoming laws, especially in Europe. I think that's a smart move. It could make VeChain more attractive to businesses and enterprises worried about regulation, because it shows VeChain is proactive in playing by the rules. Now, let's take a little breather from VeChain for a moment, because this whole earn by participating concept has me thinking about another project I've been experimenting with. You might have heard me mention it in previous videos. It's called Unity Nodes. It's not the main focus today, but it fits the theme of finding new ways to earn crypto passively by contributing to networks. Unity Nodes is a new initiative by World Mobile and the Minutes Network, and it's been catching my attention lately. So, what is it? In a nutshell, Unity allows regular people like you and me to help run a decentralized network using everyday devices. Yep, even something like a smartphone. And, in return, you earn crypto. Think of it as setting up mini-node software on phones. Instead of needing a fancy server in a data center, you use spare capacity on normal devices to support the network. They call the licenses for running these nodes software licenses. Technically, these licenses are implemented as NFTs on their platform. But don't get hung up on that term. It's basically a license to run nodes and earn rewards. I decided to give Unity Nodes a try myself. I purchased a Unity node license a while back, which came with the ability to connect up to 200 devices, phones in my case, as part of the network. Now, I didn't go crazy and deploy all 200 right away. I'm starting with a small test. I set up 10 phones to run as Unity nodes to see how the whole thing works in practice. The plan is to monitor how much they earn, how stable it is, and, if it looks promising, I can gradually scale up and add more devices to the network. One cool feature is that I can choose what crypto I want to be paid in for the node rewards. I've chosen to get paid in a mix of Bitcoin, Ethereum, ADA, and XRP, some of the big players that I'm happy to accumulate more of over time. It's a pretty great way to slowly stack more crypto passively, if it all works as advertised. Essentially, I'm turning spare phones into little crypto earning machines that bolster the network's coverage for World Mobile's network and share in the rewards. Now, I want to be clear. Unity nodes isn't the main topic today, and it's not some get-rich-quick thing. I'm treating it as an experiment, something I'll scale up if it proves worthwhile. I've mentioned Unity in many videos before, so a lot of you probably already know the concept. The reason I bring it up now is because it aligns with this whole shift we're seeing. Whether it's VeChain's new staking model or projects like Unity, the crypto landscape is rewarding those who actively participate. Gone are the days when you could just buy a token, throw it in a wallet, and earn maximum benefits without lifting a finger. More and more, you earn by doing, by staking, by running nodes, by providing liquidity, whatever it may be. If Unity nodes piqued your interest, I'll put a link in the description to their light paper and a rewards calculator so you can read up on it and crunch the numbers yourself. Link is in the description if you want to check out Unity nodes and learn more. As always, do your due diligence. It might not be everyone's cup of tea, but I find it innovative and worth a look. Alright, back to VeChain to round things off. The core message here is simple. If you're a long-term VET holder, don't sleep on this Hayabusa upgrade. VeChain basically changed the rules overnight, and you'll want to adapt to keep getting the most out of your investment. If you take one thing from this video, let it be this. Consider staking your VET using the new Stargate system so you can continue earning VTHO and other rewards. It's a quick step that can make a big difference. It would be a shame to hold a great project like VeChain but miss out on the benefits it offers just because the system changed and you didn't get the memo. And hey, even if you decide not to bother with staking, at least now you know what's going on. You won't be scratching your head months from now, wondering, why am I not getting any VTHO anymore? You'll know exactly why, and it'll be a conscious choice on your part. Knowledge is power in crypto, as in life. Looking a bit ahead, this new model could have some really interesting effects on the VeChain ecosystem. Think about it. If a lot of people start staking their VET, that means a larger chunk of VET is effectively taken off the market, locked in staking contracts. Less liquid supply can sometimes create upward pressure on price, basic supply and demand. We did see a little bump in VET's price this week. It's up around 9% in the last 24 hours, sitting roughly around 1.3 cents as I speak, likely because some folks got excited about the upgrade. Now zooming out, VET is still down about 12% compared to a month ago, so keep that perspective. One analyst I follow pointed out a strong support zone around 1.07 cents, just above 1 cent, and called it a potential reversal zone. Meaning if VET was going to bounce back from its downtrend, it would be from that area. And interestingly, this upgrade news hit right as we were near that zone. It could be coincidence, or maybe the catalyst VET needed. We'll have to see how it plays out. I'm not making any hard predictions here. On the flip side, what if a lot of people don't stake their VET? Honestly, that wouldn't be so bad for those of us who do stake. Fewer participants means each staker's share of rewards is larger. It's kind of an ironic situation. Either a ton of people stake and the network gets super robust, and maybe the value of VTHO and VET benefits from the reduced inflation, or only the diehard stake and they get fat rewards for their loyalty. From my perspective, it's a win-win scenario for active community members. The only losers would be those who ignore the change completely. They'd just be holding VET without reaping any of the new benefits. Ultimately, I'm pretty excited to see how this all unfolds. VeChain has been around for a while, and it's got a dedicated community, but it hasn't been in the spotlight much lately. This kind of major overhaul can re-energize the project. It shows the team isn't afraid to evolve and make big moves to secure VeChain's future. It also sends a message. The crypto world is moving towards a more engaged model, where simply being a holder isn't enough to get the perks. You gotta be involved. If you're feeling a bit overwhelmed by the change, don't worry. You're not alone. Changes like this come with a learning curve. The good news is there are resources to help. We're all learning as we go. That's actually one reason why I started 𝗗𝗶𝘀𝗰𝗱, which is our crypto school. Shameless plug number 2. If you want to level up your understanding of crypto, trading, portfolio management, risk management, all that good stuff, we've got courses that break it down in plain English. I poured my experience into these courses to help people avoid the mistakes I made early on. And just for being a viewer of the channel, you can use the code YT50OFF to get 50% off any course. The link to Cheeky School is in the description. Check it out if you're interested in taking your crypto knowledge to the next level. Education is one of the best investments you can make in this space, aside from maybe a good hardware wallet. Alright, let's wrap this up. VeChain's Hayabusa upgrade has changed the game for VET holders. It's shutting off the lazy rewards and pushing us all to be active participants. For some, that's annoying. For others, it's an opportunity. I've chosen to see it as an opportunity, a way to get more involved and potentially earn even more as a result. It's a new era for VeChain, one that aligns with the broader trend in crypto, the era of active ownership. So, are you going to seize that opportunity or let it pass by? The choice, as always, is yours. Personally, I'm staking, I'm securing my bags, and I'm staying informed. And I encourage you to do the same. If you have VET, take a hard look at the new staking system. If you have questions, ask them in the comments or in the Discord. Our community is super helpful. If you're involved in other projects, keep an eye out for similar shifts. The landscape is always changing. I'd love to hear what you think about VeChain's new economic model. Drop a comment below. Are you going to delegate your VET and ride this new wave? Or do you think this change is a mistake and prefer the old way? I'm genuinely curious how the community is split on this, because changes like these can be divisive. Either way, I'm glad we got to talk about it and that you stayed till the end. It shows you're serious about your investments and staying informed. If you found this story and the insights helpful, be sure to subscribe to the channel and hit that notification bell. It really helps support what we do here, and it guarantees you won't miss the next big update or opportunity we uncover. Thank you so much for watching, and until next time, stay safe and I'll catch you in the next video.